Welcome to the week ahead for financial markets. Mike Smith, head of client education and trading with you, and senior analyst at Go Markets to lead you around what the major stories may be that might influence sentiment over the next 5 days. As we close on the first half of the year, most markets are pressuring February record highs, despite everything that's been thrown at them through tariffs, through delayed rate cuts, through conflicts in the Middle East and beyond. The buy-in still continues. Of course, some of the things we're going to talk about today may influence that, of course, going forward as to whether we get more upside pressure or whether we get a pullback. We've got a few things coming up over the next few weeks which may influence that significantly, of course. We've got tariff deadlines and the next round of earnings season in the US, and of course, the data that comes out. And probably the most influential data points in the month outside of the CPI is the non-farm payrolls, the US monthly jobs report, which is coming out towards the back end of this week. At this stage, the Fed have a rate cut priced in for September. It's unlikely, though still possible, that there may be some movement in July, but despite the pressure put on the Fed Reserve from Donald Trump and JD Vance, the vice president, who's been quite vocal about it, it would take a significant drop in the health of the jobs market to influence that, I would suspect. But watch that later in the week. Of course, one of the other things that is the topic of debate in the US is the big, beautiful bill. The decision on whether it gets passed or not is imminent. Clearly, there's some unpopularity about this bill, not only generally, but also within the party itself, due to some of the far reaching implications of it and the money it adds to the US debt. So, what form it will take finally by the time it gets approved is not yet clear, but we may see a decision on that this week. And of course, that will influence sentiment. Also, in terms of asset classes, one of the major stories over the last few weeks has been the weakness of the US dollar. We'll have a little look at that right now. And you can see there on this monthly chart that we've hit lows not seen since early 2022. And we see the continued decline really since the start of the year. At this stage, there doesn't look as though there's going to be much holding it up. Certainly, the disparity between what's happening in the equities markets and the USD is quite significant. We'll wait and see. Obviously, many of the things that we're talking about today may influence the USD going forward. But whilst the US economy looks as though it may get weaker over the course of the next few months, we potentially aren't going to see much recovery in the USD. And finally, trade talks will still be vital. The 90-day tariff was imposed on most countries is up for review soon. And of course, we've got the China deal separately. There was some talk last week that some progress may have been made in terms of structure. But of course, tariffs on the European Union are still pending. And anything that comes out relating to those could obviously also be influential. So a busy week across markets potentially. And of course, you can keep abreast of what's happening at our live market updates, now streamed live on YouTube on Monday and Thursday. And of course, on Wednesday, we have our inner circle also now. And of course, we're always here to help. If there's anything that you need from us, our support team are ready and waiting to take your call as required. You guys have a great week. Trade safe and see you again soon. Bye bye for now.